So with all that, what specifically should you be focusing on right now? As a new student in this mentorship, the first thing you need to know is there are very little things you should be bringing into your expectations and what your understanding should be. In other words, basically what I'm saying is you need to have no previous knowledge brought in with this. Kind of like put everything aside and assume, and it's very difficult for those that have already gone through different disciplines of trading because they have to try to forget what they already know. And even if they've made money with it, which is the worst thing that could have ever happened, is if anything outside of institutional order flow led to your profitability, it really was just coincidence. And coincidence can happen for a long time. I did it for 9 months and it was all pure luck, and then it no longer worked again. So understanding right now what it is specifically you're supposed to be doing, that's important as a new mentor student. The first thing you need to be doing is creating a daily price action log with price charts. Now, I know some of you don't want to do this. Some of you have resisted me telling you for years to do this, but I'm telling you, you all are here and you've paid for this mentorship. You paid for the understanding and experience that I've gained over the last 23 plus years. I can tell you how I got it was doing the very things I'm going to tell you to do in this specific video. It starts here. If you skip this video, if you skip what I'm teaching you in this video, if you ignore what I'm telling you what to do in regards to what specific things you should start with right now, it does not mean, okay, just because you've been trading longer than anybody else and because you have understanding what optimal trade entry is, because you understand what an order block bullish and bearish is, because you understand what a liquidity void is, that is not an advantage. Okay, you need to go back to square one and understand that this is strength in your development. If you don't do these types of things, you're actually going to hurt your development and you're going to hurt and stunt your growth throughout this mentorship. So go back to square one. You're the new student. Do everything that's being described here and advise, because this is where the money starts coming in. If you have these things in place and you start right at this very core principle, it will develop. We're going to be focusing on this throughout the entire 12 months. Every month, we're going to build on what rules and what things that you're supposed to be looking for in the charts. But for right now, primarily, the only thing I want you to be doing is starting with a daily chart. Okay, your daily chart needs to show 12 months, no less than 9 months view. You have to have that much perspective on your chart. Don't have so much of a perspective you have multiple years on your chart. 12 months to 9 months ideally. Okay, you need to have a 4-hour chart, and your 4-hour chart needs to have 3 months of price action viewed. The 60-minute chart or 1-hour chart has to have at least 3 weeks view, and the 15-minute chart needs to have at least 3 to 4 days view. That means for every chart here, I'm recommending a specific amount of data that needs to be displayed for that respective time frame. What you need to resist doing right now is you need to resist the urge to forecast price movements. That's not for your stage of development right now. Do not try to rush ahead and try to figure out what the market's going to do next, because that's going to be a problem for you, and it's only going to lead to frustration. We will get you there, and it's going to happen in due time. But for now, resist that urge. But there are some things you need to be specifically doing with these charts. You need to note where price shown a quick movement from a specific level. In other words, if it's run quickly higher or lower from a particular level, that's noteworthy. You need to note that on your chart. You need to also note recent highs and lows that haven't been retested. That means if a high formed on your chart, if the price has not come back up to that level in recent time, okay, you need to make a special note of that, because it's going to probably be influential going in the future. Vice versa, just contrarily speaking, you're going to be able to look for the lows that have formed that have not been recently traded to, and that low will be influential later on in future price delivery as well. Note areas on the charts where price has left clean highs and clean lows. Basically, that looks like two equal highs that formed in close proximity to one another. Whenever we see a high go up and form, and then it trades away from that for a little while, and then comes right back to it and doesn't make a new high, or maybe it falls just a little bit short, just a little bit above it, I note that as a clean high. And usually buy stops will form above that, and the market will usually come back up there and run through that. It doesn't mean it won't continue through it, but it's usually a big bullseye for price to want to go up into that area.